Hi everyone, today we'll talk about one of the hottest topics right now. When will the fall end? And we'll start by first understanding what is really causing the fall. We'll also understand the anatomy of the fall, especially in the context of stakeholders of the fall. What is this FI sell off which everyone is talking about? And then we'll try to figure out if this fall is same as the previous ones, like the ones in say 2000, 2008, the pandemic fall. What is happening around us at global level, and then we'll talk about the industrial cycle or the consumption cycle, because the answer perhaps lies in the fact when will consumption revive. We'll talk about the role of AI very briefly. We'll talk about interest rates, how this will end, how to time the end. That is a question in the mind of many investors who have a little money left, but they really want to invest towards the end to maximize the money they make when the fall ends. The first one, why the volcano is erupting. Now, one thing I'll say a bit in humor is that we always find reasons to blame. We'll always have, say, a Donald Trump to blame. We'll talk about FIIs, they are exiting, that is why markets are falling. We'll talk about China. Oh, China's economy is bad. That is why it is impacting us. They are dumping steel. We'll talk about Russia and Ukraine. Oh no, we didn't do anything wrong. Russia and Ukraine fought. That is why we fell. We'll talk about crude. Oh, Middle East guys are increasing crude. It is now $140. That is impacting our businesses. We'll talk about pandemic. China caused the pandemic. That made us suffer. And our phenomena like demon, no, they were not at fault. They did not make us suffer. We were all good at the end of demon. First reason, the capex cycle is broken. That got broken somewhere around last year, around February, March, when the elections were announced. There is something called Achar Sanhita that was on, and the government could not do much. We spent nearly 3 to 4 months on elections, followed by a budget, which again came after a month, 1.5 months of the election results. And this is my subjective opinion: is capex announcements, a lot of them of late have been repetitive. For example, do you know how many times we have announced the airports in say Jewar near Noida? How many times we have announced an airport near Pune, for example, between Pune and Mumbai? At least 5 to 10 times. Yes, we are probably going to get them now, but the capex has been announced many times. Similarly, if you go towards the defense side, every announcement has at least 3 or 4 mentions in the news. One, when the government decides that we will spend money. Second, when orders are passed. The third, when the orders are actually given to the companies, say like Mazgaon Dock, HAL. And the fourth, when finally money is allocated to them in the budgets. The net capex as a result is there. It is fantastic, but it is not as high as we celebrate. Also, because of the election part, a lot of capex related money in the budgets that was actually spent on social welfare. The government is now talking about spending money especially on long-term infrastructure, assets that will eventually generate money and so on, which is great. We also saw that the current account deficit of India plunged. This is very good for the country, not so good for the economy, because when CAD is low, current account deficit is low, the government has spent less than the money they had planned to spend. Note that we are not a trade surplus country. If we are not spending money from government side, then the economy comes to a grinding halt. And if a capex cycle gets broken, in my opinion, it takes 2 years to revive fully. The second big reasons, we are now talking about P's being obscene. These P's were fine about say 2 months back. So what changed? Growth has reduced. Note, there are two ways of measuring growth. One is Y on Y, which means Q3 results of this financial year will be compared with Q3 results of previous financial year. The second is quarter on quarter, which means Q3 of this year will be compared with Q2 of this year. Usual practice is Y on Y. What is happening is that previous year the numbers were pretty good in general. Elections had spending ahead of them. Government did a fantastic homework there. So the economy was at the peak around the election time. So what we are comparing with is an artificially high number. What we have right now, it is a number lower than what we wanted or what we thought will arrive this time. That is what the P was commanding, or rather demanding. Just for example's sake, this graph is now SEBI compliant. I have hidden the last 3 months data. Hopefully I am safe here. Varun Beverages. It went like anything till it was growing. And then we had demand compression. We also had Reliance launch Campa Cola. What happened after this? Up or down, you can figure out on any standard site. However, Varun Beverages probably not enjoying the P it was enjoying 3 months, 6 months back. Let's take an example. Suppose there was a company which had 100 EPS and it was trading at 120 P. That is because it was growing very fast, say 30% CAGR. That is when GDP is growing at say 6-7%. This is fantastic growth. So as a result, the stock price was say 12,000 rupees. Now suppose this growth drops to 10% CAGR. So suddenly the market says we will not give you a 120 PE. Note that EPS has gone up right now, 110. But since PE has dropped, the stock comes down to 11,000. In fact, if this particular trend continues or we don't see a reversal, market will say we will not even give you 100 PE, we'll give you 80 PE. Actually, for 10% CAGR, the PE will be a lot lesser. Suddenly, 110 EPS will become a stock price of 8,800 bucks at 10% CAGR. 12,000 fell to 8,800, though EPS has increased. Now suppose the earnings drop, the EPS drops to 90. Market will suddenly give it even a lesser P, say 60. The stock price will crash to 5,400. This is more than 50% drop in the stock price within say couple of quarters. Reason 3, one of the most important factors, the way it is being sold to retail right now, the foreign factors. Do FIIs suddenly have better investment opportunities, say in US or maybe China or some other emerging market? Maybe there is a pressure from the new US government to put pressure on India. They are asking FIIs to withdraw a bit of money. What is happening with the rupee? It is suddenly weakening. See here, just went up. It has corrected a bit. That is because RBI has got into overdrive. RBI has sold close to 50 to 100 billion dollars from its reserve of 700 800 billion dollars. That is a lot of money gone. And if this is happening, when will we get FII money back in the markets? RBI reserves also is a misnomer. RBI never earned this money. This is IOU. Right now, retail money is drying. There is data published that a lot of accounts have got closed. SIPs also are either being withdrawn or reduced. People are pausing maybe because people are confused. Every day portfolio goes down 2-3-4% and mutual funds have not even started selling yet. Yes, NAVs have dropped, but they are not under redemption pressure. What happens if mutual funds which have got steady inflows for 5-6-7 years now? What if people say that give me my money back? Remember, some banks collapse when suddenly there is demand for money to go out. Mutual funds will have to throw stocks like say HDFC, Reliance, Airtel on the streets if there is too much redemption pressure. We should all hope that that day does not arrive, because that day you will see lower circuit on stock market and most stocks. And believe me, I have seen that happen several times. I've been in the market since 2007 and I've seen many crashes. Note that if you are not sure who are DIIs, then Honorable President of India is the largest DII with about a holding size of 40 lakh crore. This will not be sold unless government wants to do divestment. These are stocks like Indian Oil Corporation, HPCL, held by President of India on behalf of Government of India. LIC is the second largest one, 10 lakh crores. This is slightly old data. The latest data may have reduced a lot. SBI third number, 5 lakh crore. Then HDFC. This is erstwhile HDFC Limited. ICICI 4 lakh crores. Kotak Mahindra 2.5 lakh crore. Reliance around 2.5 lakh crore. It is not you alone who is suffering. Most retail portfolios are down anywhere between 30 to 60-70% right now, depending upon the composition. Retail panics at the top, they sell good quality stocks. Retail panics at the bottom, they sell good stocks and they buy bad stocks. That is to average, because bad stocks would have fallen 70-80%. How much more will that fall? Note that retail has some characteristics. They can't stand blood. Retail is greedy. Money in gold and FD suddenly looking safer to most retail. Long-term vision is suddenly gone. It was there 2 months back. Not a single fall in the history of mankind in stock markets ever in any country has been a permanent fall. Every stock market has recovered and gone up much higher from where it fell to. How much time it will take? No one knows. The Great Depression in the 1930s, 40s, that was probably a decade long. But there was a world war around it. Also, new batches will keep on arriving every year. New people will join workforce. New money will come in. Those people will have high risk appetite. They will have the longest vision possible. They will not be carrying losses with them. So they will invest. The sixth reason, and let me first talk about this table, and I've talked about this topic last year when I moved significant money out with November, December in my mind. So this money in SGBs alone and silver ETF has given me, and silver ETF was recent, around 30% return since last year. That's in less than 14 months. See this graph of gold bees. This is Nippon's gold ETF. the way it has gone up. This is since 2020. This was the pandemic fall even in the gold ETF. Panic. If we look recently, this is March of 2024, 1 year graph basically. Gold has suddenly shot up, and I've talked a lot about gold and silver strategy here. I moved lot of money here also into gold ETFs and silvers. Not many people were pessimist at that time. I probably sold a little earlier only. Remember my previous videos, I saw KFin Tech going up, BSC going up every day after selling. My money went into gold at that time. Some of us have been saying that the changes in FNO, have they led to this fall? Maybe, but FNO actually has taken traders out. It is not about investments. It does impact certain category of stocks. For example, AMCs, which were doing a lot of FNO, they have seen their EPS dip in Q3. Most small caps, mid caps, which have been butchered right now, they are not even there in FNO. Let's talk about the next topic, which is very important. Who are the stakeholders in this entire circus? Let me take an example. Suppose you go to a supermarket to buy some apples. This supermarket would have bought those apples from a dealer, say at 80 rupees a kg. Now they will sell them to you, say at 100 or 120 rupees kg. Suppose they bought 10 kg. The sell figure is 1200. The buy figure is 800. Net seller. Profit of 400 rupees. Now related to FI selling. They bought some stuff for lesser price. They are selling it for higher price. Maybe on the same day also. Maybe at the gap of 1 week, maybe at the gap of 1 month or 1 year. The difference will be there. They bought at 800, they sold at 1200. 400 rupees minus net seller for the day. Now let's watch this data. This is since about 2007, April of 2007. So within this data, a lot of crashes have been absorbed. This is the zero line. So this blue is FI cell number. This orange is DII buy number because it is minus cell number. And this is green public. What do you observe here? This line has a mirror image all the time. That is why I say FI and DII are two sides of the same coin. And public is with DII on that side. Public usually does opposite of what FIs are doing usually. Now there's one more element to it, the FNO factor, which no one talks about. And this data is courtesy Money Control. Within Feb, they have already done 45,000 crores of sales and 42,000 crores of purchases in FNO. No one even understands this data. For example, what have they sold? Put options, call options. This series, weekly series, monthly series, next month series, 3 months down the line, they might be selling here. No one fully understands what is the corresponding action in options market here. That is why you might see suddenly that you were expecting markets to go down, but they shot up. You were seeing market go up and suddenly they came down. If FIs are making 100 rupees today, someone is losing 100 rupees today. That has to be DIs or retail or both. Promoters typically don't sell. So when DIs are buying every day for months, when retail is buying for months, when markets were going high, what was happening? When markets are spiraling upwards, it seems that everyone is making money. If you haven't booked the profit, then that was paper money. It is all gone now. That is why if you recall from some of my previous videos, some of you actually said, I am moving money too quickly because I was booking profits. I was seeing this day coming. I didn't want my profit to evaporate. One question most of you would have in your mind, are we at the bottom or is there something else that could go wrong here? Long list. I'll try not to depress you, but a lot could go wrong. For example, as per the latest act, the Income Tax Act, taxes can be changed at any point of time. Imagine that you have invested a lot considering long-term capital gain and suddenly the long-term capital gain is increased from 12.5% to 20%. What will you do? What happens if there is a sell-off in US? US is at near peak and I'll talk about it. I have some graphs coming up. China, whether it goes up or goes down, India has a problem only. Major natural calamity, like for example, pandemic or maybe 9/11, most of them lead to a big problem, even if it is temporary. Oil could boil again. Right now, Brent is hovering around 75. Remember, US wants to export oil and gas right now. Do they want oil high or low? Currency depreciation, we are already seeing 90 as a reality. Could it go to 100? For IT, exports it is good, pharma, select pharma, it is good. For the country it is bad. We have a trade deficit. We already are talking about a severe heat wave this time. While I'm shooting this video, I have the air conditioner on. We are at 15th February right now. If we have too much heat, a lot of water will evaporate. It will lead to excess rains in certain parts of the country. That will destroy infrastructure, that will destroy crops. Political instability. Now, I'm not a political pundit here, but if you saw the budget, there was one state which was mentioned 4 out of 5 times. Is it indicating some sort of instability? A war with a neighbor. We have two hostile neighbors at least, but none of the India's neighbors is friendly with India. If you are in the crypto world, you might know that while Bitcoin is not down a lot, the market has cracked and crashed. Most investors in crypto have lost their shirt already. Meme coins have been murdered by just one incident, dollar Trump. This is probably one thing where government has done really well in saying Indians please don't buy crypto. EV has seen a lot of investments in India and across the globe. What if there is a meltdown or change in technology completely? We are already seeing lot of issues with Donald Trump's trade tariffs. Could we have another round of inflation? This could create huge problems for the world which has barely recovered from the previous bout of inflation. Yes, a lot of countries could get into recession, especially Europe. Europe has, by the way, not even recovered fully from the pandemic yet. NBFCs, many of them are sulking. Select few are at all time high, but most of them are in deep reds, fallen 70-80% perhaps. Many of them. Many of them raise money via bonds. Could we see defaults in bonds? This could become a big problem that will remove the faith of people in bonds who started investing in bonds, say in last 4 or 5 years. We typically do not see home loan defaults in India, but think of ticket size of 2 CR, 4 CR, especially leveraged people. What if they don't have jobs? Is this fall different? The number being talked about right now in Nifty's context is 12% fall. Way lesser than these numbers. And if Nifty falls 10% more, you can think about the decimation, further decimation in mid cap, small caps. Now, this is a topic where most people will not agree with me, which is okay. But demonetization changed India's image. This is the time when a lot of foreign players stopped treating us seriously. If a country could create a situation where its own currency is not being honored by its own government, then it is a problem. But then mostly the answer is that we have recovered after that significantly. The numbers reflect that. However, this is on top of 3x printing in currency. If we had 100 rupees in the economy earlier, we made it 300. I can guarantee you if you make this 300, 500 overnight or in next 1 month, we will touch 40,000 in Nifty. See, this is the M1 money supply, which is the amount of cash in the economy. This is demon. We first removed the currency and then we restored it back. We didn't stop here. We didn't just replace the notes. We kept printing new currency. This is 25 here. This is 63 here. This is the amount of currency we have printed. This is what has caused your inflation. See this November of 2023 onwards. This is election, June. The budget was not there, but the money was withdrawn by RBI from the supply. Not much happened till September. Then we printed again. And India is not alone. We all know US also printed. But if you see the history of US, not much was happening here. During pandemic, to rescue the economy, they printed a lot of money. This is a straight line up. After that, they have reduced their currency, and right now Donald Trump and Elon Musk are talking about doing a lot more in curbing government expenses. What that means is they will have a possibility of reducing this currency significantly. We also have seen last 5 years since pandemic especially, that has been rare, where real estate has gone up, Bitcoin has gone up, gold has gone up, equity has gone up, interest rates have been high, bond yields have been good, currency has been printed, inflation has been high, jobs have been high, consumption has been high, commodity prices have been reasonably high. This has never happened in the history that everything is going up. That is because we have printed in India and US and nearly everywhere, unprecedented amount of currency. Think of it like a 50 rupee note is now equal to 10 rupee note. The currency has been debased. So a stock market level of 25,000 is perhaps equivalent to 15,000, 10,000 of yesteryears. US has been threatened that reserved currency of the world may change. Now, who will do that is the question. We have talked about China, we have talked about BRICS, but none of this seems feasible. We also briefly saw Bitcoin as an alternate. Right now, US has already gone into survival mode. They will kill any economy or any country which gets into their way. That is why you are seeing sanctions, especially against countries which are talking about petrodollar no longer being required. Thanks to EVs, crude has been under threat. If you see Trump's initial orders, he has removed all sort of spending which was subsidizing EVs or renewable energy. Coal, for similar reason, is also under threat. India produces 70-80% of its electricity from coal. If we do a lot of solar and wind, we will need lesser of coal. People are taking physical deliveries of gold right now. People think that just like what we saw in Bitcoin last month, we might have a case where the price goes up so much that the futures will be defaulted upon. People will not honor the contract, they will default. That is why a lot of investors, a lot of governments are taking physical deliveries of gold. This is unprecedented. Silver is also looking to roar. Note that silver is an industrial commodity. It is used heavily in EV batteries. And I am long on both gold and silver, just as a disclaimer. And I own a lot of Coal India stocks. And I own a lot of companies related to crude also in India. Global markets, is everyone sulking right now? Is everyone suffering just like India is? The answer, short answer is no. On Friday, FTSE and DAX hit fresh new highs. All these markets are 0.12% away from 52-week highs. Nikkei is 8% away. What is not close to 52-week high? Nifty 15%, Bank Nifty 11%, Nifty Next 50 30%, Nifty IT 12%. US markets, if you see, yesterday Meta and Palantir hit fresh highs. Only Microsoft is in the red. See this amount of greenery here? No pinks, no reds. This Wipro ADR is red only because the bonus is not getting reflected here correctly. So who is having problems? Only India. This is a zoomed up graph. 11108105. Distance to 52-week high. All greens. Consumption cycle. One of the most important factors because that is where recovery will be. One major factor right now is microfinance, which is sulking. Most of these companies are down anywhere between 40 to 75%. Decimated is the right word. In fact, most people will feel, are these companies going to close? India is still rural. Rural is not serviced by banks. Banks don't give a loan without a collateral. Villagers don't have collateral. They need microfinance. During elections in villages, always election promises are there that we will waive off your loans. Nothing happens after the election results are over. Politicians vanish, and it has happened for decades. These people don't pay their loans in anticipation of a waive off. Waive off cannot be done against a private company. Not possible. So we have a lot of people defaulting. The gross NPAs are close to 10-12% already. Most companies have written off or provisioned at least loans more than their sales in Q3. This sector is being decimated, and as a result, there is no fresh loan being given in many villages where there are a lot of defaulters. If people don't have working capital in rural, what does this do to the cycle? It breaks the cycle completely. It takes 5-6 quarters for the cycle to revive. The capex which is happening right now needs to reflect in GDP. We need to see 1%, 2% increase in jobs. Exports need to go up. The efficiency of labor force needs to go up. That is the only way to give people more dollar or more rupee for every hour of work. If efficiency is not going up for people, then people will be replaced by machines. Also, what happens to old infra? For example, we have right now new airports in Bangalore. The old airport was closed down. Why? Is it totally rotten? Why can't some flights operate from the one midway? Is the new infra lasting enough? We can't blame rains. Good sectors have been destroyed. For example, consumption, both edible non edible, has been destroyed. Investment banking, the entire sector decimated right now. Our wounds are self inflicted here. None of this is Trump, none of this is China, none of this is Japan, none of this is Europe. This is all us. Agriculture is 60-70% of the economy still. Key commodities tea, coffee, sugar, ethanol, this is sugar again, tobacco, rice. All these sectors, if you have ever invested in money in them, probably you would have never made money in these particular stocks. Coffee, cocoa prices are at an all time high. Which company in India is right now at an all time high? Tea. We had huge crisis in Sri Lanka, which is a major producer of tea. The tea production in Sri Lanka went too close to zero for 2 3 years. Did Indian tea stocks make money for themselves and investors? No. MSPs have always gone up in this country. The farmers are not taxed. Whenever there is a problem, we put curbs on exports. What happens to productivity? Are we using farmland efficiently? There are so many industrial projects which take up farmland, fertile land. Why? Do we have less non fertile land available right now in the country? What about alternate technologies like aquaponics, hydroponics, indoor farming? Why can't they be city size, state size? We have less food than we need. We have hungry people in villages. We have poor people in villages. There is something really wrong with 65-70% of the economy and the country here. And here I'm not putting it on the current government. This is since decades, perhaps before the independence, the rot started with Britishers. Just that we have not been able to fix it completely. Without fixing it, we can have short term rallies in the stock market, but not a sustained boom lasting many decades. Let me talk briefly about AI. There is AI happening in China. If you have seen the incidents in last 15 days where Nvidia's stock lost 500 $600 billion in a single day, and a lot of AI is happening in USA. I'm talking about businesses producing AI. AI is drawing top investor dollars. Sam Altman, for example, is talking about raising $1 trillion as a company. India does not even have good trained AI workforce. I've read balance sheets of large companies. They put people in front of training modules and say they are AI experts now. And I am, by the way, an IT professional who specializes in AI and cloud. This is not how you create AI experts. And we will never be able to compete in manufacturing, in my opinion. This may sound harsh and rude. We are trying to do right now what China did 15 years back. We are not doing something that China is hoping to do 10 years ahead. So, in 5 years' time, we will be where China was 10 years back. We will not be able to compete. In any case, our taxes make us incompetent in the global arena, even for the stuff that we are able to do right now. Most of our top talent, and I know a lot of people who are in the fab business who are Indians, they have all moved to Silicon Valley because they get $1 million salaries there. Missing this boom right now is going to kill India because of the investment appetite of investors is moving to China and US companies right now. Interest rates, when you buy a home loan, you have to give 20-25% upfront. How many people working for large companies like Cognizant, Infosys, TCS can buy a 4 crore home? Simple question. City infra also matters. You saw last year when there were floods, each and every fantastic society in the country was drowned. Crores worth of cars, they became useless. Apartments had water flooding them. So good quality, high quality sofas were floating in dirty water. Very soon, people will start avoiding buying homes, they will rent homes. This will become a trend which the country will not like. Think of it like a lot of younger generation people are taking Ubers, they are not buying cars. Why? Because they hate the road infrastructure. The transport minister may not agree with me, however, that is a reality. The roads are either broken or they break at the first or second rain in the country. Also, if you note that when interest rates were where they are right now, auto industry did hit a all-time high. No one was complaining about home loan rates that we didn't buy a home because the interest rates were too high. Yes, less rates are welcome, but they don't create demand in bulk. People need confidence in their jobs to take a loan. Employment rates have to go up. People need to get increments to get the confidence to buy a big ticket item. That happened after pandemic. People got jobs. How will the fall end? The big item is FIIs need to return somehow. There are a lot of jokes and memes on Instagram for this. I'll not get into that part. But India, as of now, is reasonably priced compared to it was, say, a month, 2 months back. However, FIIs may ask for better bargains. Note that FIIs are of two kinds: traders and investors. FIIs need to come back or they need to come with more money. I have no say in this, but taxes have to be stabilized and acceptable. If abruptly taxes will go up, like LTCG, STCG got increased last year, this will create a problem because a lot of mathematics for investors changes. When, for example, gold rates crashed by 8% in the previous budget, most gold investors lost 10% in 2 days' time. This instability in tax structure is not good for long term investors. Whatever government is at center, that needs to be stable. We can't have coalitions run this country at all. We will be asked this question: we are a US ally or a Russia ally, we will remain neutral, which is okay. But again, neutral, there are benefits and there are side effects. India led this particular pack of people saying we will move away from petrodollars, which right now has backfired a bit indirectly. I already talked about consumption cycle. Consumption cycle needs to go up, and that needs to reflect in QOQ numbers because people will be watching it. But year on year numbers have to be good. This may take few quarters. Even if the economy starts improving, the stock market results takes time to stabilize because a lot of bad quarters will have to be digested and averaged out. Government spending is going to be critical. When government spends, the money goes to companies to fulfill those orders. These could be private companies or public companies. Those companies will outsource work to several vendors. Those vendors will pay their employees. Those employees, once they get money, they will consume goods. Somewhere in the cycle, we have to create more jobs. And like the finance minister said in the budget this time, this has to get into constructive infrastructure being developed, which will lead to long term value creation for the economy. That's the right thing to do. We have to get away from giving free money. This is what I meant. Freebies need to go. People need to do hard labor for less money. Right now, it is reverse. People need more money for doing less. People don't want to do hard labor. US can afford it, Middle East can afford it, some of the other developed countries can afford it. India can't. People need to leave their comfort zones and work. Suddenly, people in their 50s and 60s who are not CXOs, they are not finding jobs. This is a big deal because these people had the highest money and suddenly they have zero salaries. This is a killer for consumption. So many people who joined, say, IT somewhere around 90s, mid 90s, they are right now finding hard to earn money. Those people no longer are getting steady paychecks. We need to do something about this particular part. Manufacturing hubs, we need a lot of them, and in every state. We can't have just two states take the country forward. Or just remove the concept of state, make it one state or one country, and at least everyone will get chances to grow. The infrastructure has to be created, the jobs have to be created, manufacturing has to be created as per weather and terrain. For example, you can't create a sugarcane field in an arid land. It will take too much water, which is in any case not available or very expensive. You have to create manufacturing around export hubs like seaports. You can't have in the middle of the country. Yes, we would ideally want a lot of taxes as income, but if taxes are too high, it hits everything. For example, this year there will be no STCG and no LTCG. Taxes can't kill demand. If there is no profit, there is no tax. If there is no salary, there is no tax. We need to double up on exports. Think of it like if taxes are high or if our cost of production is high, then we export zero. If taxes are 1% and we export a lot, at least 1% is there. We also need to cut down on imports, especially for stuff that we can produce like coal. When we have the largest coal reserves in the world, we have to cut the trade deficit. One solution could be currency printing, but that will be temporary with lot bigger harm like the currency printing of last about 8 to 10 years has done to this particular economy which we are seeing right now. Now, a message for a lot of you who are trying to bottom fish, trying to figure out when markets will bottom. Believe me, I've been in the market since 2017 and 18. I've been able to get top or bottom sometimes, but that's by luck, not by talent. It is not possible to time the markets at all. A lot of wealth has already been destroyed. Markets have reasonably fair value. A lot of more pain could be remaining. I already mentioned what could go wrong further. Right now, it is no longer about current or past valuations, it is about future demand. We have seen crypto decimate wealth. We have not seen Nasdaq fall. No company has gone bankrupt yet in India or abroad as of today. And while small caps have bled to destruction, mid caps have actually created more pain. That is because people believe in mid caps. High quality mid caps have crashed 50%, and that is where people have been averaging aggressively. Those are right now at 52-week or even 2 3 year lows. Even PSUs, the good quality ones. And if mutual funds crack, then we could have a decade worth of losses. How I am playing the market right now, I am considering a lot of factors. Future earnings is one. I right now prefer companies who don't have debt. And I especially like the companies which have good cash flows, because if you see HUL's example recently, they can grow inorganically because a lot of companies can be purchased cheaply right now. It is important to figure out stocks which will have demand even in bad economy. Recovery timing is important, how much it will take for an industry or a company to recover once markets improve. If I'm taking a risk, I would want to have a favorable risk reward ratio, give multiple. I am looking for sector leaders where management is high quality. I am avoiding companies which could have a huge impact from America or China in general. And here I'm talking about the negative impact these economies could have on Indian companies. Based upon these things, I am taking my decisions. I am still invested in the market, though I have moved a lot of money in gold and silver. And this move I have done over last 15 months or so. It is not a recent phenomena. In recent past, I have moved more money to gold and silver. I have started nibbling down on stocks. I am buying some stocks which I really like, which are available right now with about 1 2 or 4 quarters at least in mind. I am buying certain stocks with 3 year in mind. I don't think this particular fall will last 3 years, and I don't have net new money. So I'm selling a lot of stocks in losses, and I have been doing that since last few months. Can't carry the bad decisions. Have to move on. Having said that, no one knows where the bottom will be. It could be tomorrow, maybe we had it on Friday. We might not have it for next 2 years. You will have to play out the markets the way they happen. One message for people who have done SIPs in the past: it is not a good idea to pause SIPs now because we are already down a lot. If you intend to be in the markets for long term, you might want to switch to a different SIP, that's fine. But don't stop the SIPs. Maybe if you have money, then do some extra SIP installments whenever you have money. Bear with the bloodbath, good times will come. Thanks for watching, and I will see you next time.